This is Kerry Artak with Wicked Signal. In this video, recorded Sunday, December 6th, 2020, I'm taking a look at both the SPY, or the S&P 500 SPDR ETF, and I also take a look at the SPDR Technology ETF, symbol XLK, the Technology SPDR Fund. They're both showing strength, and I've done some SPY videos here over the last month or so. I just want to sort of underscore the fact. Actually, before I do this, please let me tell you, to remind you, really, thewickedsignal.com. Have your trader and investor friends go to it. Fill out the free subscription form, first name, last name, email address, and they will receive a new email analysis video every time one is released. You'll find it in your inbox. You won't have to wonder whether you're receiving notifications or not. I don't. Also, fill your inbox with sales pitches, and I don't release information with anyone outside the organization. So let's jump into the SPY. You're probably familiar with some of these charts in preceding videos, but I just wanted to emphasize the fact that this market did settle above resistance that was midterm in scope. And this week at 366.59, and you can see on this chart that as per usual, a full 4 weeks later, it rises to 368.84. You can subtract those numbers, divide by 4, and you'll have the exact location of that horizontal channel top through the month of December. It is a base of support that can absorb selling now well into Q1, because from here, expecting bullish continuation into the 420s. Depending on whether volatility expands and we get an accelerated price move, or it just sort of grinds its way higher, which it can as well. That could take several months. And so from here, I haven't actually done the math, but what is that, about a 25-30% price gained from here in the broader S&P 500, and that's what's implied here for that. So good support in the upper 360s, anticipating, I'm just going to say, the 420s over the next few months. And that formation is, by the way, rising. It'll be in the 430s and 440s into later Q1. So that is the objective. That upper channel top able to contain quarterly buying pressures if or when tested. Also, upon settlement above on a weekly basis, a meaningful upside accelerator well into 2021, into later next year. Now, I must address the downside possibility that if we close back below this 366.59 formation at the end of this week, the week of Monday, December 7th, then signal unless we close below what is now at 358.57. And I just have that for this week, because this short-term 4-week channel bottom will change, obviously, every time a new high is put out. And I'm expecting new highs following last week's buy signal. So, that's why I'm only giving you 1 week of data here. But, let's say that the market backs off, opens lower on Monday, not only takes out that 366.59 formation I showed you in the previous slide, but also falls and closes below 358.57 at the end of this week. Well, that would indeed be a sign of reversal, a sign that the market is likely to continue south into the 320s. 2 to 3 weeks, 3 to 5 weeks, something like that. I'd say between now and the end of January, you would then expect 325 even, or roughly 25 even, or roughly. I'll definitely be putting out another video if this unexpected event occurs, which is to say closing the week below 358.57, 325 even then expected by the end of January, where the market can actually bottom out into the second quarter of next year, and from there rotate on and up to new highs within a matter of weeks, if not months. Months, if not weeks, I should say. But I'll leave you with this final SPY slide, just underscoring the fact we are in buy signal mode right now, above 366.59, expecting bullish continuation over the next few months into the 420s or higher. So let's take a look now at the technology sector SPDR fund, symbol XLK. This is one of the first entries in the tech sector ETFs. It's a SPDR fund, so it's very it emphasizes S&P for large cap technology, or stocks, I should say. There are ETFs out there that include a much wider universe of the tech sector, and I'd be happy to look at those. If you had any in mind, you could just shoot me an email, send me a text. But this particular tech sector, it avoids those smaller, less stable, firms that results in lower volatility and a tilt toward value. This fund tilts more toward value compared to the broader tech industry benchmark indexes, so forth and so on. So, I don't know if there's a huge downside of that. But what I like about this is I do have a buy signal right now. I should say a secondary buy signal. We've had some longer term buy signals I'll show you in a moment, but we do have a secondary sign of strength now in this fund, and I think you should then now respect the possibility for kind of a broader based tech rally that can play out the first quarter well into the first quarter. So let's jump into the technology sector chart. I'm just showing you, this is a monthly chart that goes all the way back, into the later 90s. You can see the bubble there. You can actually see the prices here of 65.44, the 2000 high, broke to $11.40 in 2002, and most recently an all-time high at 127.72, and that's the 2020 high from a few months ago. We've been in a consolidated framework since then. I'm going to open this chart up a bit and just look at the last few years, and this is a weekly bar chart of the XLK, and you can see simply here that I've got a channel top. That was a buy signal. I mean, it got a little sloppy there over the summer. We settled above it. We came back, settled below it, but then we took off and settled above it, and that was about all she wrote. Rallied to that all-time high. Looks like July. And right now, this is the way I would, talk long-term with regard to the XLK. And we actually came very close to testing it a couple of times over the summer and early autumn. And that is that's the formation at 109.74 this week, December 7th, rises to 110.28 the first week of January. You can subtract the out, divide by 4, and you'll have the location of that former channel top through the month of December. It is a floor of support that, if tested over the next month or two, and I don't see that happening right now because I've got a buy signal I'm going to show you in just a moment. But if it is tested, it can absorb selling. I really want to say through 2021. I'm not sure if that obviously would happen, but I could see that if we were to test that formation, say between now and the end of Q1, it can absorb selling into summer, fall of 2021, and from that point on, the market can continue moving higher. In fact, I don't see a good reason to assume a retest of this area, given what happened last week. That for the first time, we settled above a horizontal channel structure. You can see here, I'm going to open this chart up just a little bit more, and you can see that it's at 125.01 this week, Monday, December 7th, rises a bit to 125.37 a full month later, 125.37 the week of January, the first week of January. So, you can once again subtract them out, divide by 4, and you'll have that channel structure through the month of December. It is our intermediate floor of support. And from here, I can tell you that higher trade is likely in the 140s, 150s. That channel top rising steeply, I think, should not be discounted. It's and I recognize this is probably a 20-25% rally that I'm anticipating now. Over the next, I'm going to say next several months. And this formation, if tested, can contain quarterly buying pressures if or when tested. So I'm giving you the numbers here. Holding above this 125.01 formation should yield the 146.09 formation over the next 2 to 3 months. Now, I'd be remiss if I didn't mention the fact that there is another element of this channel top at 129.01 this week, and that just may be tested this week, rises to 129.38 the week of the first week of January. And so while I certainly respect the buy signal above 125.01, and I think the likelihood is, and I don't know if this will happen or not, but holding above that 125.01 formation maintains a 129.01 target that just might be realized this week, and that is a hesitation point. We may top out there for the week, but as long as we continue trading and holding and placing weekly settlements now above 125.01, that channel top, and we did close above it last week, I think you should respect the likelihood for bullish continuation well into Q1. As I say, the 150 is anticipated over the next few months. If you haven't if you're not interested in buying downward pullbacks this week in this fund down to 125.01, then I think you could realistically and reasonably hold out for a weekly settlement above 129.01 at the end of this week. And that would be considered a secondary buy signal that should also obviously just lend validation to what I'm seeing above 125.01. In the previous slide, closing above 129.01 underscores that likelihood that we'll see bullish continuation into the 150s, 160s over the next several months. So, if we close back below 125.01 this week, yeah, there is the susceptibility of falling back to that 109.74 to 110.28 area that I mentioned a few slides ago. But I think I wouldn't really have a strong sell signal even if we close back below 125.01. I think we're back into sort of a pause mode, and I just don't want to get deep into the weeds on the particulars there. The real purpose of this video is just to show you that we have two broad-based buy signals, one for the general S&P 500 itself that I showed you earlier in this video, and another for the technology sector spider fund, the XLK, above 125.01. And so it looks to me as if the tech sector is ready to launch into another rally here following several months of consolidation and two-sided trade. I think that's really all that needs to be said for this particular video.